Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, September 18th, 2013. Well, a change of trend to the upside today. A candle that's made a higher high and a higher low. Previous day's trading we had a change of trend to the downside, a lower high and a lower low, but on a fairly bullish candle which was rejected from the support at the window that was opened a day prior to yesterday's trading. For today's trading, we've seen a very bullish market today with a very large white body candle. The white body denotes the buyers making a substantial amount of net bullish progress on the day between the open and the close, and suggesting the buyers have found some very, very solid upside momentum in this market. The buyers have closed up towards the high, suggesting that the buyers have closed with very strong control of this market. Now, the market took out the important resistance level at 93.86, where we had some recent price rejection from there, and took it out in a very bullish manner, and confirming the buy signal here with the Ichimoku breakout up above the cloud a few days ago, and really seeing very good follow through after the market traded above the cloud, found support within the cloud, then support at the top of the cloud, and then bouncing off. And yesterday I suggested that there was a real possibility with the buyers taking control of yesterday's trading for this market to trade to higher levels and to potentially test up to the 95.36 level, and that's exactly what we're seeing today with this very solid bullish candle. In terms of the Fibonacci extension, and we're examining the relationship of this new first time frame uptrend to the previous time the market's trending up, and today we've seen the market trade through all of the important levels through the 50%, 61.8%, 100% level in a bullish manner. Our next target is the 161.8%, that's at 95.56, and it becomes a very real possibility with the amount of enthusiasm that we've seen in this market today. It's really a bit much to suggest that this market will trade substantially higher. We do need to watch how the market reacts around the 161.8% level at 95.56. If we see price rejection coming in and sellers coming in, and the sentiment in that candle changing, there may be potential for a change of trend back to the downside, with the market trading off and finding support somewhere and then bouncing back off. But at the moment, our next target is there at 95.56. In terms of the Fibonacci retracement, we're in an expansive mode of that, a rush of enthusiasm today with the market trading through the 161.8% level in a bullish manner. Our next target is the 261.8% level up here at 95.64, and that coincides roughly with the other Fibonacci technique. So an area that we really do need to watch for potential resistance in this market. In terms of Ichimoku, obviously a bullish market now in the long-term time frame. We've had the bullish breakout and follow through, so a good buy signal with the Ichimoku charts. The market's also bullish in the medium-term time frame by trading up above the Kijun-sen, the pink line here, and above the Tenkan-sen, the green line, and both of those indicators are pointing up fairly sharply. Disregard the last part on here because that reflects the candle that hasn't finished trading, but the solid upside momentum is reflected in that angle, and suggesting that this market is certainly destined for higher levels, if not today, probably over the next week or so. Now, if this market does come off, there is potential support down around the previous resistance level at 93.86, but no levels in between where the market's trading at the moment. Looking across here at the Chico span, that's above the corresponding price action. It has been for some time. It reflects the longer term momentum in the market, and is supporting the bullishness that we're seeing in all three time frames with the Ichimoku indicators, and suggesting a very real possibility of this market trading higher. Now, for this market to continue trading higher, it will need to trade through the 95.36 level, a previous important level. Then we have the 95.81 level above there, and no major resistance until the market trades up to 96.62. So basically for tomorrow's trading, we do need to watch this area around 95.36 for the market to potentially trade to higher levels. Watch those Fibonacci levels, but certainly if the market comes off, potential support at 93.86.